Imagine a future where buying a home is as fast as sending an email, and where every step your coffee bean took from farm to cup is instantly verifiable. That future isn't decades away. It's unfolding right now, thanks to blockchain technology. Welcome to the generational wealth community, your pathway from knowledge to legacy. Blockchain isn't just the foundation of Bitcoin and major cryptocurrencies. At its core, it's a shared, immutable digital ledger that records and verifies transactions in a way that's transparent, secure, and nearly impossible to tamper with once confirmed. Today we're unpacking a real revolution, the real-world application of blockchain in real estate and supply chains, two of the biggest engines of the global economy. Let's start with real estate, the largest asset class in the world. Traditionally, property transactions are slow, opaque, and full of intermediaries, from agents to title companies to escrow services. Blockchain promises to streamline that entire process. With blockchain, smart contracts can automate property transfers. These are self-executing agreements written in code that only complete once predefined conditions are met, eliminating the need for multiple middlemen and drastically reducing the risk of fraud. In real life, blockchain applications are already emerging that enhance transparency, security, and efficiency. Land registries built on blockchain can securely record property titles so that ownership history is instantly verifiable and fraud is far harder to commit. One compelling trend is tokenization of real estate assets. Tokenization means converting ownership rights into digital tokens on a blockchain, allowing fractional ownership and broader investor access that wasn't possible before. That turns expensive illiquid assets into something people can trade more easily, democratizing access to real estate investing. We're already seeing global moves in this direction. In early 2025, Dubai's Damic Group signed a $1 billion deal to tokenize real estate and digital asset rights on the Mantra platform, making select properties tradable online and marking one of the biggest real estate blockchain integrations to date. But the impact isn't just tokenized assets. Blockchain can shorten closing times for home purchases, simplify title transfers, and reduce administrative costs. Experts suggest that blockchain systems could make the often month-long closing process far faster and cheaper, with fewer opportunities for error and fraud. Now let's pivot to supply chains, another foundational pillar of the global economy and another area blockchain is reshaping. Supply chains are inherently complex, involving many parties from miners to shippers to retailers. The challenge is visibility. Who shipped what, when, and where? Blockchain solves that gap. Imagine scanning a QR code on a product and seeing exactly where it was made, how long it sat in transit, whether it stayed within safe temperature ranges, and which suppliers handled it, all recorded on an immutable ledger. That's not science fiction. It's happening now. Blockchain enhances traceability and provenance in a way that traditional databases simply can't. Every step of the supply chain can be recorded and verified. And once that data is written, it can't be altered without consensus from the network, which means transparency and accountability are built in. This is especially valuable for industries where authenticity and safety matter, like pharmaceuticals, food safety, and luxury goods. If a product needs to be recalled, blockchain can instantly pinpoint where affected items are in the chain, speeding up responses and protecting consumers. Blockchain also enables smart contracts in supply chains. These can automatically trigger payments or actions once certain conditions are met. For example, releasing payment to a transporter once a shipment reaches its destination without manual intervention. Case studies already show real benefits. Modern blockchain logistics platforms can manage automated contract execution, cold chain monitoring, carbon footprint tracking, and real-time supplier risk assessment, functions that enhance operational efficiency across industries. Take traceability startup OpenSC, for instance. Consumers can scan a QR code on products tracked on the blockchain to verify sustainable and ethical production claims, transforming consumer trust by making supply chain data transparent and available to the public. But as transformative as these applications are, we shouldn't ignore the challenges. Integrating blockchain across entire supply chains or real estate networks requires industry-wide cooperation, technical upgrades, and sometimes regulatory clarity. Not every company or government is ready to transition, and legacy systems still hold significant market share. Despite those hurdles, the trend is unmistakable. Blockchain is bridging the gap between physical and digital worlds. In real estate, it's creating new investment paradigms and transaction efficiencies. In supply chains, it's giving companies and consumers unprecedented transparency and traceability. As these technologies mature and layer on innovations like IoT, AI, and tokenized assets, the way we buy homes and track global goods is set to be one of the most impactful stories of the next decade in crypto and blockchain adoption. If you found value in today's deep dive, subscribe for daily recaps. Drop a comment on your biggest takeaway and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.